He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
Another special edition of the Angry Mortgage Podcast with my guest, Albert Collu, President and CEO, Marathon Mortgage. And, you know, I sometimes question that I should be sort of producing information for other mortgage brokers. Like, in theory, I'm a mortgage broker, so I should be trying to harm them, Albert. Like, I really should. Like, I should be trying to run them into the ground. But we do a lot of stuff on the, I'm serious, like I should, but we instead do a lot of stuff that a lot of mortgage brokers listen to. So we're very happy to have you on the show today. You're the first person who's coming from your side of the business. Like, we've had a bunch of private lenders on. They've all been great. Okay. They are great private lenders. You're the first person who's actually doing the low rate mortgage finance corporation mortgages. Okay. Mm-hmm. But first, tell us a little bit about how you got into this business. Like, nobody ever goes to the guidance counselor in high school and says, Jesus, I want to be a mortgage broker. I want to be a mortgage lender. And nobody says that, right? So how'd you get into it?
Well, actually, I had no idea what a mortgage broker actually was. Honestly, I literally fell into this industry. But I started off actually as a broker, very, very short time. I don't think it was about a year I spent as a broker. And as I got lucky, I was starting to evolve my business plan, and I started to get introduced to a great lender by the name of Home Trust, that everyone's very familiar with. So they reached out at that time in my younger days and asked if I would take on a role, and I quickly ascended to become one of the VPs of the organization. So I spent a good chunk of time there as a lender. And then I eventually was asked to take on the challenge with another great institution named First National. So I built, I was really responsible for building out a program called Excalibur. That was sort of our baby, our collective baby. Yep. And then took a little stab at entrepreneurship. Created a company that eventually was merged into a company named Mortgage Architects. Yeah. And then progressed on to something different after that company was sold. I became the president of a company called Verico, which you know.
Yes, absolutely. We were involved with Verico at one time.
That's ago. Right. And you know, I can never escape acquisitions and mergers. So
you can't. That's the nature of the beast, right?
That is well. If that's not happening, you don't have a business plan.
That's right.
And then I took on another great role for the M3 group of companies as the president of that whole division. And now I find myself back on the lending side where my heart's always been. So that's a very high level, but yeah. So today I'm the CEO of Marathon Mortgage.
Yeah, the funny part of it is, I'm not beating up on M3 because they're an important part of our business. I mean, and I hadn't really even spoken to Luke before. Luke Bernard runs M3, but all of a sudden last weekend I saw him. We saw him at a number of different things. Great guy, got a lot of vision, very smart man. But if I remember, when you left M3, the guy who came in, he was also like damn near arrested, right? Wasn't that guy almost arrested, the guy who took over?
No, I know who you're talking about. Yeah. Now, so the gentleman that actually stepped into my shoes, so to speak, was his name's Dino. Actually.
Dino.
Yeah, so Dino is a wonderful personality, great guy, completely different background than the mortgage business.
But somewhere somebody was almost damn near arrested.
You know what? I'm going to leave that one for M3. I'll leave M3 to tackle that one.
Listen, look, I mean, people recruit, look, in any company, I've recruited, in the tiniest way. Yeah. I've recruited people that I really figured out like a few months later, like, holy mackerel, who have I got here? Yeah. I mean, like that can happen to any company, but I just thought it was a funny one that Peter Alcido, sorry, before you call your lawyers, Peter, you probably were never arrested, but you definitely were under investigation at one point. So, and you were cleared. I mean, as I remember correctly, everything was dropped. That's my recollection of the whole thing. But it is what it is. You don't call your lawyers, Peter. It's not necessary. You're a great guy. But that's a journey. You've been on both sides of of everything to do with lending, mortgage lending in Canada. You've seen it all.
Yeah, I've been really lucky because it's really made me well-rounded. I don't mean that like in a self-gratifying way. I think it's made me a much better lender in as much as I can be, having gone through the grind with brokers.
Sure.
I think I understand.
Yeah, you know the drill.
Absolutely. I don't take it for granted, for sure. Yeah.
And by the way, the only really rounded guy here is me. Like, I'm really, really round. Okay, I am the wellest, roundedest person that ever attends these podcasts. So on the lending side now, so sort of just for the public, sort of just explain how Marathon works in a sort of a 8,000 foot view. How does it actually work?
Are we talking from a funding perspective?
No, let's just talk about Marathon itself. Like, what's Marathon's reason to exist?
Yeah, well, great question. I mean, so really in the simplest terms, Marathon is just another option for Canadians, right? We're just another lender.
Another mortgage lender. Yep.
We're another mortgage lender. We try and work within the space. It's very competitive, very, very tight in terms of margins. But we're just a great outlet because we're a little bit more lean and mean and scalable. So, we're able to compete in the space that everyone's sort of got their foot in, predicated on being able to handle our margins a lot easier, for lack of a better phrase. So that usually parlays into better rates for the consumers, and as much as we can put forth those rates. So simplest terms, we're a mortgage finance company, Canada-wide, and we're always looking to help Canadians as much as we can.
So I guess what every Canadian who starts looking for a mortgage first thinks about is just think about the big 5 banks. And maybe the big 6 banks. I'm not mad at you, National. You're all good people. But looking at the big 6 banks, because God knows there's where the ad money is. And there's hundreds of years worth of reputation in those companies. But the reality is that lots of other companies can provide mortgage lending to Canadians. And is it fair to say that if you can operate in a lean, mean fashion, that you can offer a little bit better deal to people? Is that a fair statement?
Yeah, I think it is. Absolutely. And I think the advantage to being smaller, leaner, if you will, is agility. We don't have a bureaucratic process. We can actually have one-to-one conversations with borrowers and not put them in a bucket of, I got to protect margin, as some of those other institutions may have to go through with each decision. So our decision model making is a lot more agile and a lot more personable.
Yeah, I got to make it really, really clear. Neither Albert or I are mad at banks.
No, God, no. We need them.
Banks are the reason that Albert and I exist. Mm-hmm. Okay, whether you like it or not, 87% of all financial transactions in Canada get touched by banks, the big 6 banks.
Yeah, absolutely. In fact, one would think this is a bit of an odd comment in terms of my affection for banks. You're absolutely right. If we don't have the banks in our backyard, so to speak, we don't have a business. We don't have a channel. And it's interesting because the first thing most people in this industry think about is the front-facing. So, we got a great lender in Scotia, and you got a great bank in TD who are front-facing at the broker level. Yep. But what brokers may or may not understand is, as you said, basically 9 out of 10 of the mortgages out there are sold off to the banks. There is another really pronounced financial institution that we haven't named who is not directly in the banking, or the broker channel, but they are incredibly important because they buy a lot of these loans when we securitize, which we'll probably touch on.
Sure, we'll get into the process.
Unequivocally, we need the banks. So in a lot of ways, it's incestuous in a lot of ways because it's very intertwined.
So to sort of sum up for the consumer or borrower who's looking at this stuff, the banks, it's one of my quick aside stories for being a very old person, is that there was a guy back in the 30s. There's a bunch of 20-year-olds saying, what does he mean by the 30s? We haven't got to 2030 yet. No, but there was like 1930s. Okay, there's a 1930s. And there was a lot more gangsters back then, like wide open gangsters. And one of the guys who was a gangster back in the 1930s was somebody called Alvin Creepy Karpis. His nickname was Creepy Karpis. His street names didn't just start up lately, okay? They've been around forever, okay? So Alvin Creepy Karpis was doing all kinds of bank robberies, and he finally got caught, and he was going to go to Alcatraz. And they interviewed him before he went to Alcatraz. And they said, hey, Carpus, why did you rob so many banks? So many banks. You were like robbing a bank a week. What's going on there? And Carpus, a dead, flat tone, looked the reporter in the eye and said, because that's where the money is.
Right.
The money is in the banks. Okay, that's where the money is. So Canadians, we put our money somewhere. Like all of us have bank accounts. Like if you're a business, you've got a current account. If you're a consumer, you've got a checking account. You've got some savings. You've got some investments. If you start to think about all those things, wherever you put your money, typically ends up at a Canadian bank. I mean, sure, you could be with Questrade, you could be with a few of the others, but mostly it's at a bank. Because even if it's Simply, that's the CIBC. If it's Tangerine, that's Scotia. If it's HSBC, just be patient. It's going to be RBC.
Correct.
So sooner or later, where you put your money, or if you invest through TD Waterhouse, well, I guess TD's got a hand in that, right? And the list is long. Don't get mad at me at banks who I didn't mention there, but I mean, you're all great. We love you all. BMO's coming to the channel. Thank you, BMO. BMO's going to be offering through mortgage brokers in the very near future. So we love all you banks, but that's really important for Canadians to understand. Canadians put their money in banks. Therefore, the money's got to come to the mortgage offerer, the people who offer mortgages, and most of it's going to come from a bank. Because that's where Canadians put their money.
Right.
That's where corporations put their money. And that's where, we'll get into the securitization in a second. But so to sum up, we've got a bunch of great mortgage lenders in Canada who are specialized, as are you, at Marathon. We've got names like First National, who you mentioned. We've got MCAP, a bunch of others. MCAP owns a bunch of other companies, RMG. They just purchased Merix, Paradigm Quest. We got RFA, wonderful bunch of folks over at RFA, great people. We got CMLS. I mean, like, you start to say to yourself, Butler, do you just do these fucking alphabet things? I mean, like, I got to compliment you, Albert. You got an actual name of a company, okay? Like, good for you. Good for you to have a name that everybody can remember. We got CMLS. There's a bunch of others. And by the way, this is something to consider. Even a credit union, big ones, can't just depend on their own deposit books, right?
No.
They got to sell some mortgages just through a bank someday.
Yeah, I mean, listen, the banks, one of the biggest advantages you have in those types of spaces, you get to leverage your cash, right? Yeah. So if you're going to grow your books, you're going to grow your business, you need to leverage. So credit unions are not immune to that need, so that they will reach out in different ways.
They got to.
But I just want to go back to your point. It's so funny that I don't know if the words vilify, but sometimes in the industry we see some pretty strong remarks made about banks, and I couldn't tell you how misguided that is, because the reality is, to your very basic point about, if we don't have the banks, we don't have a viable channel. There's just zero arguing about that. And if brokers aren't clear on that, I would suggest they really need to understand the space. And I mean that as constructive. Now, the reality is, one of the funniest things I deal with, which is not unique to any monoline lender, any mortgage finance company, is that you'll hear borrowers from time to time say to a broker, well, what if they go bankrupt? Well, I would open up a bottle of champagne, right? For starters, so your mortgage is off the table. But the reality is that no Canadian should ever have that angst about getting into a relationship with any of the monoline lenders in our space, because at some point or another, most of these mortgages have been sold off, which means someone's got it. You're not in harm's way in any way, shape, or form in terms of a borrower. And you can't arbitrarily change the terms of a mortgage, even if it was sold on the back end. So Canadians are more protected than they actually think. There's a lot of strong regulation around that.
That is such a great comment. And sometimes, I got to admit, I have so far on the podcast forgotten to make that point to everybody. So, by the way, when you hear us use the word monoline, that applies to these companies that I just mentioned, including Albert's. It's a term that is kind of frowned upon now, but if I'll tell you where it comes from, it's like this. Monoline, because they only sold one thing. They were in the mortgage business. That was it. We just did mortgages. Mortgages, lines of credit, that's all we did nothing else. By the way, that's where the rate reduction comes from. That's where the rate advantage comes from for these companies, because if all you can think about is one thing, you got to get really, really, really goddamn good at that one thing.
That's exactly it.
And that means lean, mean, keeping the internal costs down and offering the borrower the best possible deal. That sums it up, right?
Yeah, absolutely. It's all specialization.
In the end, the bank may end up being the provider of the money, a bank. We'll get into that in a second, but a bank may end up being, the person who ultimately funds your mortgage in a different way. Obviously, you're paying Marathon, or you're paying First National, you're paying MCAP, but the money from the bank is what funded the mortgage ultimately. But we'll get to that in a second. But here's a really great point that Albert just made. I just want to emphasize it. That when somebody talks, a mortgage broker talks about, I think the best possible option for you is to go with CMLS or Think Financial or Rate Hub, or wait a second, I don't know. I only know RBC. I mean, I heard about Scotia, TD, BMO, heard about CIBC, but I don't know any of these other names you're saying.
Yeah.
And what if something happens to them? What if my mortgage is with one of those companies and something happens to those companies? Nothing happens. Okay, like that's what we tell everybody constantly. Sir, ma'am, you are the asset. You're the reason that you're something precious. You are a high credit score, reliable borrower who is what every bank wants. That's why we can get you a little bit better deal with Marathon, CMLS, MCAP, whoever, is because you are the asset. And by the way, that's what a bank calls a loan. They call it an asset. Okay. Yeah. Believe it or not, it was always a puzzle when I was a kid growing up. Wait a second, you're saying assets, but aren't they all loans, mortgages, etc.? Yes, they are. But the perfect paying borrower is an asset. And if you're that perfect paying borrower, and God forbid, and I don't think it'll ever happen, but your mortgage company that you signed up with is sold or changes hands, you're the asset. The buyer, the person, whatever happens, it's even theoretical that one could go broke. They never have, but let's just assume that it happened. Immediately, another financial institution comes in and buys those mortgages because you are precious. You are a perfect payer. And by the way, just as Albert said, that contract is a bilateral contract that must be honored. If the other bank buys that contract and they have to give you exactly the mortgage that you signed up for, exactly the same rate, exactly the same prepayment provisions, exactly the same penalty calculation, they can't do anything with it. It's a contract that's under law. And believe me, they want to buy it. Because the one thing we know for sure in this country, and Albert will back me up, everybody wants a great mortgage borrower. Yeah. Everybody. Every bank, every monoline, everybody does.
Okay. There's so many points there. The first thing is about this last point about other institutions would come in, step in if something went wrong with a lender is so true. And you're right. You can't legally adversely change a contract.
Yeah.
If anything, the only exposure is that your situation gets better because they can change towards improvement.
Yeah.
So if someone buys a book of business because the company's gone down, so to speak, knock on wood, it's not a far-reaching thought where a lender may say, Mr. and Mrs. Client, we've taken over this book. We see this all day long, by the way, in car insurance, right?
Sure.
And you know what? We really value, and they want to keep their book sticky. We're gonna do this, whatever that is. But the aim is never to make it adverse. They can't legally. It's normally to keep things static or at least improve. Just because they bought, quote unquote, an asset. The last thing you want to do is buy these assets and see them run off. It doesn't make sense. So to a Canadian, what does that mean? You're fine. You're in good shape. Another thing that's really, really important, you talk about monoline lenders, you mentioned some really great ones, right? The RMG, CMLS, First Nat, MCAP, us, Marathon. And what I have seen, at least in my experience on both sides of the ledger of this business, there's a gravitational pull that's actually getting weaker. And what I mean by that is not so many years ago, it was important to most Canadians, you would know this better than I would, Ron, that for some reason, Canadians want to feel and touch the bricks and mortar of a lender.
They want to see the building.
I want to see, is that, okay, I know who they are.
Yep.
And I would say that we've started to see this really aggressive movement away from that. I think if you remember ING Direct, who was a great lender at one point, then Tangerine now, we've seen these remote virtual type of institutions without branches per se. They still exist. They got real offices. They're real human beings.
Yep.
And we're starting to see, I'm sure you see it in your great business too, where the bricks and mortar aren't that important. And I think there's demographic change to be said for that. But it's interesting to see that from a Canadian's perspective, that's important for them to recognize, because the bricks and mortar mean nothing. They really don't mean a thing. And actually what it means potentially is more cost and probably not the best deal you can find.
Right? More cost for sure.
Totally.
Okay, more cost
so
for sure.
I think Canadians should be fixated not necessarily on who exactly are these people. It's a fair question. But why would I pick these folks? What's the advantage to a smaller... I'm using smaller a little liberally, because when you mention First National,
huge
these are monolithic institutions
of billions
that
of dollars,
have earned every pound of their flesh for sure. So anyway, you're right. Canadians are in good shape if something goes awry.
It's fascinating what you just said, because the real truth is that for people under the age of, say, 32, 33 and down, nobody wants to go anywhere anymore.
Right.
We'll go to a resort, or we'll go someplace that's fun, or we'll go to have a drink, or we'll go to eat something. And even then, mostly a lot more Uber Eats and skip the dishes. But younger Canadians, they don't want to go sit in an office and wait for somebody to talk to them. Like, fuck that. Okay, that is absolutely not what they want. If you can't communicate with me digitally, or text me, or call me, I'm not driving to your place of business. I don't even own a car.
Yeah.
I don't even own a car. So I'm not going anywhere to your place of business to chat or to talk or for you to explain something to me. Okay.
Yeah.
Don't want that. If you can't communicate to me digitally or by phone or by text, I don't want it. So that's the big change that we're facing.
Well, that's an interesting point too, because there's a dynamic going on there outside of convenience. That's really what everybody wants for all the reasons you cited. No question about that. But I think brokers and Canadians, there should be some warning they should heed, because I don't think anybody can argue anymore. Canadians are far more educated before they pick up the phone or send an email across the desk.
Research,
yes. They know what's going on, but I think the research actually ends at a cliff, because I still have even close friends and family say, well, I want to get 2.95 instead of 3%. And then when you say something as basic as, listen, do you know on your mortgage amount that means $14 a month? They're like, what? Really? Like, you spend that on a macchiato at Starbucks every morning. It's not about the face rate of a mortgage. There's so much more to it. And I think the problem that we've had, Ron, I don't know if your audience or you will agree, is we have gone, for the most part, away from sound advice, really, which is what a broker is supposed to deliver. And we've commoditized this industry. And we've come back to this lowest common denominator. And I think that's happening more now. I get it. The rates are ridiculous. We all can agree with that.
But they're too high, for sure.
I guess the message I'm trying to put forward is brokers, don't lose sight of who you are in terms of good counsel and good advice. And Canadians don't get so fixated on 5-10 basis points, because when you really look at the math, it actually doesn't really mean a hell of a lot. It's usually a cup of coffee.
Listen, the more than ever before, the mortgage broker option for Canadians has become important for all the old reasons, but they're more important today.
Mm-hmm.
Choice. You need choice, and you need some guidance, because even though the mortgage product itself is very simple, in the end, it's a contract. You make the payments, we give you the money. That's it. There's some prepayment, there's some penalty. It's all there. You can read it, you can study it. It's there. It's simple. It's the getting the mortgage that's becoming harder. That's what's becoming tough. It's the getting through the application process, getting to the right lender, getting the right options, knowing what your options are. But mostly, it's the application process. Albert, cast your mind back to when you first started the business.
Mm-hmm.
Is there a bit more research and documents today than there used to be?
Oh my goodness! You know what? Honestly, Ron, I've been only doing this I think 22 years now, maybe 22 or 23 years, and it is not even the same industry. So I say this cavalierly, but it's true. I'm going to tell you something. Yeah. I'll give you an example of how much the model has changed. So when I was brokering, and you'll remember these days with a great lender like Home Trust, we literally used to get a piece of paper and say, okay, Mr. Butler, how much do you make? I make $110,000 cutting hair in my basement apartment.
Yep.
And you would submit that, and as long as the house looked great, your documentation requirements outside of an appraisal were very minimal.
Yep.
Right? So there's been a dynamic change that's hit everybody, including Home Trust, right? I've heard unfair criticism, well, Home Trust, now they're asking for documents that they never used to ask for. Yeah, well, times have changed.
Government makes them do it.
Government makes them do it. Regulators make them do it. And let's call a spade. Probably a little bit taboo to bring up, but when the industry is what it is right now, not the industry, the marketplace is what it is now, rates, supply, things we'll probably get into, what you're really doing is instigating fraud for shelter. And that is a real problem. It's the ugly
document fraud, yeah.
Document fraud.
Yeah.
And it's the ugly cousin in the room that no one wants to acknowledge, but it is a thing. It is a real big thing. So documents have changed. Regulation has changed. We have a responsibility at all levels. Whether you're a broker, whether you're a lender, we're all in the game. And
it's funny you mentioned that, because there's one thing that gets mentioned constantly in social media, with which I am involved, is when you talk to people who've recently bought a home, and obviously that's the last 2 or 3 years, they talk to you about, hey, I had to prove every goddamn nickel of my down payment.
Absolutely.
Like, what the Christ were they thinking? Like, where do they get the money from? Well, okay, here's the trouble. There are a few money launderers in this country. Not many,
right?
Not a ton, but a few. But the way our government works is, it's just like the airport, Albert. Okay. Like, there's only a few people might be dangerous on a plane, but everybody goes through security. Everybody goes through security. And a little old white-haired granny goes through security. She might have to go through, where's that thing that they scan you down to your bones. Okay, here's old granny in there. And here's a little, I don't know, maybe not 5 years old, but there's an 8-year-old kid in there. And it doesn't make any sense, but it's the way we approach things. Like, we understand there's some evildoers, a small number, a tiny number. But because we really believe in an equal society, everybody produces 1,000 pages of bank documents. Everybody's got to prove every transfer. Mm-hmm. Everybody's got to verify where every nickel came from. That's the one thing we see in social media the most, is people talk about the fact that I had to prove where every goddamn cent came from in my bank account. Like, every little trivial transaction. They researched it. And let's face facts.
Yeah.
We never saw that 20 years ago. We never saw that 15 years ago. It was just, yep, you got down payment. Yep. Oh, it's sitting in your bank account. You're good.
We're good. Yeah.
Hey, so it's about the mortgage application now. That's the tough part in the mortgage business. It's getting the approval. It's getting all the documents in. It's getting all the information together. The mortgage itself is pretty simple.
It is, but a lot of the stuff you've touched on, I know you and I are aligned on these points, is that it's solvable.
Yep,
let's call a spade a spade. No matter how much we try and put lipstick on this pig, it's a pig. We've made the mortgage application process really onerous for an average Canadian.
Dense, right? Very dense.
I'd actually, it's probably a strong term, but at times pretty intrusive.
Yep, it's intrusive.
For the reasons you just cited, right? I think a lot of that has to do with the sophistication of fraud, which we can get into.
We are going to get into that.
We're going to have to.
Yeah,
because it's a piece.
Because DNA may be next. Okay, that's possible.
Yeah, we'll just swab you and tell you if you got something. But, the reality is there's so many ways that the government can actually step up as an industry partner. The most obvious to you and I has always been, why doesn't CRA just allow us to ping to make sure income, and for those that are listening, I'm sure you know this instinctually, but income is the number one fraud element. So if you can get rid of that.
Yeah, we've had tons of stuff in this country. It's so easy. We've had tons of documentaries in this company. We've had TV shows. We've had all kinds of investigative reporting. We've got all kinds of it. And here's the thing today, folks. The fake income documents are perfect.
Yeah.
They are absolutely perfect. In fact, even down payment documents are perfect. The only way you could ever... Well, you caught one a while back, right? And that was... The documents themselves were perfect, but...
Right. Yeah, no, it's a great story. Well, not really, but it is. So, the credit actually belongs with one of my teammates. His name's Jason Kennedy. So, listen, I'm biased, of course, but I've been around a lot of underwriters, a lot of managers. This guy he's good. I mean, we love him. He does a great job. And there was a loan. He had the spidey sense, right? Because that happens sometimes. He said, Al,
seems off.
Something's off here, right? My bell's going off. And I certainly don't have his eyes, but I just... Third eye looking in, my eye gravitated to one particular document that was pristine, by the way. I mean, gorgeous.
Perfect.
Like, just perfect. And then I looked at it and I thought, wait a minute. We've got a daily interest savings account. And allegedly, this gentleman, this borrower, had put $180,000 in about 6 months ago.
Big money.
And I said, Jay, look at that line down there. He says, which one? That one. I said, it says zero. There's zero interest accrued. So had this perpetrator not actually put the zero there, I honestly, Ron, I don't know that we could have told you these were fraud or not. But this is how good it is.
Document perfect.
Beautiful.
Calculation error.
Calculation. And it happens with T4s and pay stubs too. Right?
Yeah. So look, folks, here's what we know. In a day where you can take a human being and through AI replicate them and have the President Biden like on a rocking horse with a lollipop in his mouth, and it looks just like him. I mean, like they're that good. You can do that kind of visual change that easily. Pretty damn simple to change documents. Pretty damn simple to create perfect documents. That's easy. So the linkage to CRA. So just get this over with quick. The linkage to CRA is required. Hey CRA. Hey Krista Freeland. Hey all you people. This is the easiest goddamn thing in the world. It's not a privacy invasion. We only want to know this. Does one single number match CRA's records? We don't need to know their tax story. We don't need to know their deductions. We don't need to know anything about it. Does net taxable income, line 15,000, match the documents they've given us, freely given us, and signed a release? Okay. Does it match? CRA, yes, no, stop, go, just say one or the other.
Agreed.
Simplest thing in the world. They will not do it. Folks, they even have the budget for it. They still just can't be bothered. Just too busy with something else. So you want to fix mortgage document fraud in Canada, talk to your government. They can fix it. Talk to the federal government. They can fix it tomorrow. All right. So, Albert, here's something that, again, we don't get that much opportunities to talk to A lenders, like prime rate lenders, best rate lenders. So just give us a sort of an 8,000-foot view of, so somebody asks for a mortgage from you. How does it all happen? Where does the rate come from? I know, let's make it super complicated, but where does that money come from and where does the rate come from?
Okay, so I'll fly as high as I can and then probe where you think, or stop when it gets really boring. Yep. So I'll just stay really high and say there's basically three conduits for financing, for funding as a lender, right? The first one is...
a mortgage lender, yeah.
Mortgage lender. The first one's kind of obvious, right? It's the balance sheet. What does that mean? The loan comes up for funding that day. We go downstairs, we turn the vault, we open it up, we take it out of our bank account, we proceed it.
Right.
Okay. Number two is what we call is whole loan sale. So that can happen a number of ways. You can finance it off your balance sheet. So you'll fund X amount of loans that day, and you may sell it off somewhere else.
But you're selling it typically to a bank.
Well, right? I'm going to get to that one.
Right,
yeah.
Okay, yeah, go ahead.
Then, so the whole loan says you might even have like a power line, which is just a fancy term for a big line of credit for lenders. So we may put on a line of credit and then sell it off thereafter.
Huge warehouse line. Yeah.
Huge. Yeah. I mean, we're talking big. And then there's the third way, which really doesn't rely on your own assets, meaning your own cash, or you don't have a power line. And for the easiest term, we call them commitment sales. Which basically means everything's already handled at the time of commitment. So the short version of that is Butler Mortgage sends us a mortgage. We get that. We issue a commitment. We send that off to our investors. They hedge it, which is the fancy way of saying they lock that money down.
They make sure the rate can stay the same.
It stays exactly there. Which is complex in itself.
90 days, 120 days, whatever.
Whatever it may be.
They got the rate.
Yeah, there's some cost to that.
Sure.
And then come funding, there's all sorts of boring things from a broker's perspective that happen. But at the end of the day, the money gets transferred, and then we issue it, and then the U-Haul's backing up onto the driveway. But now to go to your point, all three of these conduits, whether it's whole loan sales, balance sheet, commitment sales, are all largely dependent on securitization, which is a fancy word to make ourselves sound smart by saying we sell the mortgages off.
Yep.
Right? And that is not a mortgage finance company conduit. That is, I don't care what kind of institution you are, right from the big banks that we mentioned earlier to the Marathon Mortgage Corps and credit unions. So securitization basically means that as long as these things are insured, not high ratio, could be insurable, as long as they're insured, then you can put them in a basket, you can sell them off, and treat them like a trade, like a stock trade, and they're gone. Which goes back to your earlier discussion about why Canadians should not freak out, because no one actually says it out loud, but 90% of these loans have all been sold off in the marketplace. Where
to banks,
right?
Yeah.
And actually, in fairness to the banks, sometimes they securitize and sell off these assets to maybe interdivisions, maybe the wealth management, maybe pension funds, maybe a little bit of everybody.
Yeah, folks, like for instance, if you've got money in a bond fund, some of the money you've got invested is for your retirement in a bond fund is mortgages.
That's right.
It's mortgages at the end of the day. I mean, it's because we bundle all the mortgages together, turn it into a bond. Okay, and that goes into your wealth management. Like you said, it's in your wealth management account.
Yeah, when I use the term securitization, there's so many things. I mean, there's a ton of things that go on, from swaps to what we call the CMB, MBS, on and on. They're just different roadways to the same end. But it's important because while that offers some complexity at times, sometimes those things turn into what we know as IRD.
Yep.
That's another conversation for another day maybe. But these things allow efficient movement of monies so that lenders like us can be competitive, and it keeps the risk profile down. Now, even that's a misstated comment, because really at the end of the day, sometimes some of the insurers, particularly one, gets a lot of heat because they're very close to the feds. But they're the custodians of some of these programs. And the reason why they're attractive and they help Canadians is because that particular insurer guarantees the risk. So not to oversimplify it, but these are risk-free for the investors who buy these things. They're covered. They're like covered bonds or bullet bonds.
Yep.
And that a lot of that sounds irrelevant to a broker, but I'll tell you, they couldn't be more wrong.
No,
because
they would be wrong.
We need to impart this into the brokers.
Yeah, brokers need to understand that you don't have a big box full of money at Marathon's headquarters, and that you have to make sure that the loans, the mortgages you're doing, fit into a box, fit into some. I know this sounds weird, folks. We typically end up calling them buckets. I don't know why we did that, but we do. Okay. So to fit into a bucket, it has to look like what the people who want to take on that mortgage want. It has to match the profile of what they want. And that's why some of the, some brokers come like, hey, how about, this makes sense. This is common sense. You should do common sense lending. Dude, it's got to fit in a box. Okay, that's it. I have to tell people all the time, well, why are commercial mortgage rates so much higher than residential? Folks, they're handmade. They are made by hand, okay? They are done by, people pore over these commercial mortgages. Think about it. Examine it. They got to run it through a bunch of people, other people, their bosses. A residential mortgage in Canada today, if it fits certain contract guidelines, it's mostly a computer decides. What's
that's a very fair statement, and I know you know this because we talked privately about this particular point. It's a pet peeve of mine when I hear folks in the quote unquote A space, as we are, get up on stage or be at lunch and say, we're a common sense lender. First of all, that is a problematic term. First of all, it's inaccurate. Two, common sense is very subjective, which leads to the conversation that you just described. And the reality is, here's the truth. Innovation in this space, and the way that I've described, is becoming increasingly difficult. So when someone says we're a common sense lender, I have to call a little bit of BS on that, because common sense for us, most lenders, looks like this on an 8x11. It says if it doesn't look like this, and hey, by the way, if it's not insured, you're a dead duck. You can't sell this asset. So we'd all love to be innovative. We all love to have quote unquote common sense, but that's not how the financial instruments work.
At the end of the day, all that we can really try to do is get Canadians the best possible deal on their mortgage, best possible rate, best possible contract provisions. We got to go through that somewhat today difficult process of getting the application approved, of pulling all the threads together of how that application works and exactly how that income works. And okay, can we use a 2-year average of the bonuses, or we can't use a 2-year average of the bonuses? How much overtime? Still overtime? What does the job letter say? Let's match this pay stub up to what we think the income actually is. Look in the computer. I mean, sweet Jesus, it's a lot. Okay, and that's what everybody out there who's a borrower needs to understand. It's like a duck. It seems very serene as the duck proceeds down the pond, but there is a whole hell of a lot of splashing going on underneath where that duck's feet is trying to move it along. Okay?
That's right.
A lot of activity. So that's the problem we're faced with today, is very, very complex underwriting to fit these boxes and to get people the best possible deal, because that's what we're here for. Best mortgage product, best possible outcome for the consumer, and to get them approved. That's why we're here. Because you know this, Albert, there's all kinds of people who might go to a bank and they're told by the bank, well, you don't quite fit, but here, if you come up with this much more down payment, we can help you. And you end up at a mortgage broker and they say, no, I think we can make this work. By the way, that's not somebody at a bank being ignorant or being, trying to stand in your way. Because again, most of the money comes from banks. But it's become so goddamn specialized that these people in the banks who are also doing RSPs, investments, looking at credit cards, figuring out car loans, they don't have time to study the crap out of the stuff that we have to do because it's all we do. Like ultimately your business as a monoline lender, as a mortgage finance company, and my business as a mortgage broker, the alignment is we're highly specialized and we got to be efficient, effective, and knowledgeable in the areas that we work and do it effectively, give a great deal to the borrower, or else we wouldn't exist. That's the truth.
Yeah, I couldn't agree more, particularly in times like this. Actually, I shouldn't even say that. I want to go back to about 2016, and I have been on the record a gazillion times saying that brokers don't necessarily need to complain and push against these complications, if you will. When the transaction gets more complex, I actually believe brokers' value just goes out through the roof. Because that specialization you're talking about, and I don't mean that disrespectfully of branch people at these banks, but you are not going to sit down with the individual who just sold a checking account, an RSP, a car loan, to get this kind of advice. There are so many moving parts in a mortgage right now. You need specialization. I know it's a bad cliche, but if I got a problem with my plumbing, I'm not calling an electrician. Right? I mean, I'm just not. And never shall the two meet. Actually, water and electricity.
Let's hope they don't meet. Yeah. You're gonna get your ass lit on fire and you're gonna get electrocuted in your toilet if they meet. You're right. So that's the problem.
It's funny because when you talk about all these things, what brokers may or may not be seeing is that these actually turn into something real, which are costs. Because whether a deal funds or not, from our perspective, there's a real cost on average, regardless if this thing hits the goalposts or not. And what I have seen, and the comment I'm going to make is coming from the warmest place, is not to be critical of the channel, but we need to up our game as it relates to professionalism.
Yes.
And what I mean by this is I am appalled, honestly, about how many times I look on certain social media outlets in our industry who, with regular consistency, brokers are bashing lenders. I'm not talking about Maryland. I'm talking about just other lenders I respect. You named a handful of them.
Sure.
Bashing them and bashing them and bashing them. And these are lenders that have done hundreds and thousands of mortgages, and we've
hundreds of millions of dollars, billions of dollars.
And what's going the wrong way at the cost of professionalism is that we're throwing mud at lenders. Okay. And that's only one side of the story, because the lenders rarely are going to chime in to defend their position. They just don't feel it's worth their aggravation. But what you hear a lot in the industry, something like this. You know what? I sent the file, and all of a sudden, this lousy, shitty lender asked me for documents a day before. Yeah, but the part of the story that the industry doesn't see is the broker actually was holding the documents hostage because he or she knew that once they provide those documents, it did not fulfill the application they submitted.
It was
That's
trouble.
Not a lender problem.
It was trouble. Yeah.
So it's not to throw mud. My point is when the applications become this complex and this administrative, brokers have to remember a couple things. So we talked about fraud. You can't say, well, listen, sorry, Mr. and Mrs. Lender, those docs came from a referral source. Well, by regulation, you're the custodian. You are the agent. You are absolutely under obligation. You got to know.
Yep.
You got to know. And number two, it's on you as a broker to make sure that the application you put forward to any lender, I don't care what kind of lender it is, you're able to substantiate. And you can't throw the mud and you can't throw the rock outside of a glass house when you know damn well that the documents have nothing to do with the application you sent us.
Yeah, there's too much of that.
So all of us can do better.
We can all do better. Now, here is something that's also, we're going to move on to something that's really close to both your and my heart, is the difficulty that so many young Canadians have today in buying a home.
Yeah.
And it is so real. And you might say to yourself, well, Ron, you're a mortgage broker. You want to get as many people as you can in homes, so you're kind of biased. Yeah, I'm kind of biased, but I also have a whole bunch of employees in our company who are in their 30s, and they're stressed.
Yeah.
And they're you talked about something earlier today. So tell us what you've observed in that area.
Yeah. Well, I mean, I'll preface with this. I think a lot of times we all talk anecdotally because it doesn't hit home. We talk about all the stress of home buying and whatnot, and it does hit home. So in February, March, my son and I and Rachel, his fiance, we had a chat around the kitchen table because about 2 years ago, they came home, so to speak. So Matthew finished university, and he said, Mom, Dad, how do I get into my home? And I said, well, you and Rachel have to save a bunch of money to give you a hope or a sniff. Well, I couldn't be prouder than that.
Because you need a huge down payment.
You need a hell, I mean, that's how we were all raised. Save a bunch of cash and, you're on your way. Well, I mean, for crying out loud, these two are going to save about $150,000 in a 2-year, which is huge. Ron, that was the cost of my first home.
That was the whole house.
That was the house.
That was the whole house, yeah.
And now here I am. It was such a lousy day for me to sit there with a laptop to show, my future daughter-in-law and my son who are working their asses off. You can't afford a home. They're like, what are you talking about? I have $150,000. Yeah, well, the home that you want, you don't have a sniff. And even some of the condos were kind of sort of out of reach, right? So that really hit home with me. And then, we were talking about common sense and innovation. Those things are really, really difficult to do. So I made a bit of a personal mission in as much as I can control the space to create a new product, which manifested in the 6-month product that you know well, which was to help affordability, get people in homes, all that sort of thing. But, it's a real thing that you have young Canadians doing it right by the old definition and still can't get in a home.
So that by the reason being that if your son and his fiance had their heart set on, say, maybe not a house, but like a townhouse or a semi or something where they, they just maybe not like, let's face facts. We hear a lot of people in government talk about the need for density. Well, hey, government, listen. Some people just want to buy what they fucking want to buy, okay? Yep. Like, I mean, oh no, we have to force you to buy in a dense. You have to start. You should all be happy with the condo. Actually, fuck yourselves, government. Like, honestly, all you urban planners, all you people who want to say, well, we're going to dictate to you people. Always be afraid of that phrase, you people. Okay, we're going to tell you what you should do, and you should all just buy a condo in a dense location and with access to transit because we don't want you to ever own a car. Well, folks, no. Let's leave the choices up to people. Like, I'm not talking about everybody needs a 60-foot frontage lot with a backyard that goes to a park or something. No, that's not what I'm saying. But I'm saying, can't we just have some choices left in our lives? And when the price of everything has escalated to the point where, as Albert's described, 2 young people, decent jobs, living at home to save their asses off, to put together this amount of money for down payment, that's more than what Albert paid for a whole house when he bought the first time, okay? And then when you look at the interest rates today, you look at the stress test today, and you look at the price of houses today, and then you do the calculation, you pull up the laptop, do the calculation. No, you can't, even though you've got enough money, you've got more than enough money to put a down payment on a less than $1 million house, because it doesn't have to be 20% under $1 million. But your income, you need to make, like, instead of making $150,000 between you, you need to make $225,000.
Right.
Okay. Holy shit. How wrong is that? How wrong is it that in Metro, in Southwestern Ontario, or in most of British Columbia, you need to make the family income that's in the 6 or 7% of all incomes in Canada. You're going to be in the top 10% of income in Canada to buy a townhouse in the expensive regions. Hey, I get it. People say, well, then move to Brandon, Manitoba. Everything's fine. But they don't want to move to Brandon, and you don't want them to move to Brandon. You'd like to see a grandchild someday and not have to fly somewhere to see him, right? I mean, that's rational, right?
That's exactly what's going on in my household. Now they're talking about living in these outskirt markets. They're like, oh, geez, and I got to spend 2 hours in good weather to come see you.
Yeah,
but that's what we're facing right now, and it's something's got to give. And I don't know what the heck the fix is, because on top of it, I mean, we all know about supply issues. We all talked about this to nausea. We're bringing 1 million people, 500,000 a year, into the country, and where are we putting them all? And the thing is, it is so broken, you don't even know where to start. It has variables that don't necessarily appear to be directly related to mortgages. For instance, there's a basic question here. We have so much land in Canada. What the hell are we all doing by the border? Why can't we sprawl it out a bit? And I think it goes back to a whole bunch of things. Building costs, municipalities.
But hold on. If you talk about sprawl in Ontario, the RCMP might arrest you.
Oh, yeah. Okay? No, fair.
Holy mackerel. I mean, like, you can't even release they're putting actually all the land back that they ever took out to build subdivisions because of an RCMP investigation or because, like, listen, I rant and rave about corruption every goddamn week, so that's not it. But, like, we gotta just, like, as Albert said, so many nodes of interference, so many different issues clouding the ability for people to do the most simple thing in the world, buy a home to raise a family in. We got so much going on. It's just punishing.
Yeah. You know what? The unfortunate side effect of all this is, fortunately, my son's very motivated as Rachel is, but a lot of these folks, these first-time buyers in these age brackets, like mid-20s to early 30s, we have sucked the absolute motivation and desire out of them. You know, I have friends that are exactly the same age, kids are in that bracket I'm talking about, and they have literally run, after years of great education, doing it right, have waved the white flag and said, I'm never going to own a bloody home. Some talk about leaving the province, some talk about leaving the country, some have. Some have, and I think it's probably beyond this podcast at this point because of time constraints, but the consequence of that is we're not attracting talent, we're not innovating, we're not doing a lot of things because we have sucked the motivation out of people.
Let's just be clear for all the listeners, all the viewers. This thing about super expensive, unaffordable, complex mortgage regulations, people setting up systems that actually motivate people to buy properties to rent them out instead of living in them. It's a lot of subject here to cover. We're not going to do it. But what Albert says is 1,000% true. You've got people who are surrendering. You've got young people who are giving up and saying, I am never going to own a house in this country. And yet, every sort of public opinion polling that's ever been done clearly shows that no one believes they're part of the middle class until they own a house. Right. No one does.
I totally agree with you.
90 percentiles. Okay. Yeah. They believe that's how I know I've succeeded in this country. I have a family. I can raise a family in a house that I own. And the more we push back on that, and I know people say it's complicated. You know what? It is complicated, but someday I'd love to know how the hell we got here. Okay. Yeah. I mean, there's there's really not enough discussion about that. There's not enough real discussion because if you don't go back and figure out what went wrong, you're never going to know how to fix it. But we don't talk about that much. So here is my and Albert's message to all levels of government. You talk about helping these young people who do want a home. Sometimes you actually tell them, oh, don't you really want a 600 square foot condo really to raise your family in? No, screw that. Let's be rational. Let's make it our greatest goal as governments in this country. Any government, change the government, keep the government. I don't care. Provincial, municipal, federal, I don't care. But let's get back on track and let young people buy a house. That is my message. That is my endless message. And that's a crusade that we all should get on board with because that's our future. Mm-hmm. The future of people who've given up on home ownership isn't a great future.
Incredibly well said. The whole surrender comment is real and it's conquerable. We can deal with these things.
It's got to be fixable, right?
It's got to be fixed. It is fixable, but it goes to, I think the heart of all this conversation really is the big question for me is the one that remains unanswered is how did we get here?
How do we get here?
How did we get here?
Albert, thank you so much. It's been a pleasure having you. Thank you for your descriptions of how mortgage brokers who work with mortgage finance companies actually, how does that money actually come? How does that mortgage get created? And thank you for supporting the Mortgage Brokerage channel as a great lender. And let's just see if we can find ways to get more people into more houses. That's got to be our goal.
Thanks for having me, Ron.
Thank you for being here. Appreciate it.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.